The whole of consumer defensive sector is one of the hottest stocks out there, and it's very hard to look for companies that trades at fair values. But despite that, I think I came up with probably three best steals in the sector in 2022. Hey guys, I'm the Newb investor. Today we'll be looking and screening three stocks at purely financial standpoint through our three metrics to see whether the stocks are trading at overvalued, fair, or discounted prices. And from there, we should see if the individual stocks are a buy or not. First of the three stocks, even though it is overvalued, it is still my first and top pick because there's only a couple of stocks that you just can't go wrong. PE is a staple and will continue to be. People are still going to buy their products and they can only grow more from there. We've seen their financials, but here it is again. We have here the EPS multiple of 4.94. We're paying 1.73 times their earnings and 1.23 times historically. We've done this in the previous video, so you might want to check that out. The next two stocks, probably of the whole overvalued sector, made the most sense from my three metrics. If the markets value these companies like any other stocks, these two stocks could easily 2 times or 3 times from here. But it always depends on the participants of the market, so nothing is sure after all. My second stock is TSN, Tyson. It currently trades at 93.37 with highest price of 100.72, market cap of 33.84 billion with PE ratio of 8.75. The stock gives out an annual dividend of $1.84 a share, a yield of 1.97% of the current price. It's crazy how other stocks are valued too much while this stock lagged. Anyway, it is all going to make sense in 5 to 10 years from now. And I think this stock has more upside to it. If you're investing in it for the dividend, it is safe at only 18% of what they're earning with an EPS of 10.32. Here are the three metrics. EPS multiple is 0.82, which is very attractive. But with the second metric, we'll kind of see why the stock trades at low PE. But again, if we compare this to how the markets value the other stocks, they have like 3 times, 4 times multiple. But with TSN, it's only 1.89. Historically, we're buying it at a discount at 0.67 times if we buy it at these prices. To conclude, TSN passed two of my three metrics. With one metric, we can do a kind of compromise with. If you want to buy this stock, you might want to buy it at the lowest PE the market offers you. I have here 8 as high PE. That's double their yield. I think the stock is trading at fair values and it would be wise to start a position lower than 80. My third and last stock is Target, TGT. Compared to other grocery and discount stores, this stock has the least multiple of them all. TGT is trading at 199.22 with high price of 268.98. That's 26% of the highs. It tried to go higher but it got rejected. Market cap of 95.45 billion and PE ratio of 14.66. It gives out an annual dividend of $3.6 a share per share, a 1.81% yield of the current price. If you're in it for the dividends, it is kind of safe at 26% only of what they're making. Guys, remember these dividends are not always 100% safe as they might have some rough years, especially with low yielding single digit margin stocks. Here are the three metrics. EPS multiple is only 1.08, so it's trading around fair values EPS wise. With the second metric, obviously it is low as this is one of retail stocks that yield single digit margin, but if we were to compare this to the kinds of Amazon, Kroger, and others, this stock only trades at 3.55 times earnings. For the last metric, historical PE, it is trading at 1.01 times. compared to the PEs where it traded before. So it basically screams fair value. To conclude, it passed top my metrics and I believe it trades at fair values right now. And it is smart to buy it at these prices to, you know, kind of accumulate. So yeah, these are my three stock picks for consumer defensive sector. I'd love to do a follow up on these stocks a year from now, a year from then, and so on. I don't know if I'll ever be owning these stocks in the future, but I'm looking forward to seeing these stocks soar and be valued like any other overvalued stocks after screening these stocks. If you like to invest in these companies, I'd advise you to use a longer time frame of data, like 10 years of data or more. Also, look at their other metrics like long-term debt, current ratio, etc. As always, do your own research.